McDonald's stock, MCD stock is rallying today. While this is going on, stock market is selling off rapidly. Now there's a few things that are going on with the stock market, which is actually one of the reasons why McDonald's stock is rallying. There's basically three things. First, tariffs. Tariffs are still on for China. Very likely we're going to play the game of are tariffs on, are tariffs off for some time, as we learned over the weekend from President Trump. Then finally, the economy itself is slowing down. So you have NASDAQ stocks that are selling off, Nvidia specifically, as well as Tesla, which are pulling down the broader stock market. Most of the stock market over the past couple of years, a big chunk of the push higher was in high-tech stocks that were growing rapidly. The growth is already over, and so now we're seeing a downward move. People are getting out of those stocks. At the same time, we are seeing concerns with tariffs, inflation that tariffs will cause, and an economic slowdown. We already have an economic slowdown. Tariffs will make it worse. Tariffs are still on for China. What is it, 20, 25%? Who can keep up? So what does this have to do with McDonald's stock? The thinking is simply this. We will have an economic slowdown. We already have one. Tariffs are going to make it worse. We will see unemployment moving higher. Those people who typically lose their jobs first are the lower income individuals, who are also the individuals who consume food at McDonald's more regularly. So the thinking is that because the economy is slowing and unemployment will go up, because tariffs are going to wreak havoc while simultaneously the tech market's sell-off is happening, McDonald's will get a bigger share, and that's why investors are rushing into MCD stock. I can buy into that to some degree. At this point, however, I can no longer buy into McDonald's stock's valuation because MCD stock is now a bit too high priced. It just spiked up this morning somewhat, has fallen 2% from its spike just today. The broader stock market continues to move lower. While I like the concept of McDonald's stock moving the way it is, I think MCD stock is overpriced at this point. I could see MCD stock maintaining a continued value because of the revenue they will generate. Their dollar menus or low-cost menus will continue to bring people in. They're not going to hurt as much as some other stocks. So MCD stock continues to move higher. But when you break down the fundamentals and take a good look underneath the hood for MCD stock, you can see that, it might be priced a little too rich at this point. Not necessarily a buy, but definitely a hold. Let's jump in. I'll show you the charts that I'm looking at for McDonald's stock. Here's a look at MCD stock. This is the 1 hour bar chart. Going back, you can see we got earnings that came in actually worse than expected. Missed on revenue, missed on earnings per share. And I do have some numbers I want to show you on earnings per share. Regardless, it did move higher, whereas the broader stock market continues to sell off. Now, McDonald's is such a key player within the stock market. So this is a sort of a saving grace. Now, this particular chart, I put this together pre-market. Actually, last night, Sunday night, there was a spike higher to 326, as I mentioned, and it is now back down to about 320. So we saw a big spike higher in McDonald's stock, and it came right back down. So this price is about accurate, but the chart is slightly aged. I did put, for those of you who follow me along on my other media areas, my Substack newsletter is out for the week. I broadly take a look at all the areas of the stock market, the economy, breaking everything down, and where I'm getting involved. One thing that I am looking at, buying SVOL ETF on its dip this week. My TLT ETF trade continues to improve, but that volatility I expect will settle down at some point. What I'm trying to do is buy some calls on SVOL ETF. Make sure to stop by my Substack, sign up for there. You can get my videos up there, and you don't have to, if you're looking at this on YouTube, you can get my videos up there and not have to deal with the advertisements. So it's nice there. Some great content creators on Substack. Make sure to stop by if that's your thing. So let's move forward. And you can see the whole stock market has been selling off, but McDonald's is rallying. And they didn't really participate in the big move higher that we saw with the tech stocks. All right, NVIDIA, that's really the big portion of the story. But then you also have Tesla. NVIDIA was the growth story. It was, what was it? Late 23 or all through 2024, we saw a big, huge move higher NVIDIA stock simply because of the AI. Now, the growth rate on that is slowing down. And from there, the broader stock market is selling off, specifically NASDAQ. NASDAQ, I saw, was down roughly close to 13% since its peak February 18th. That's huge. It's all NVIDIA, which had pushed the broader market higher as much as it did. Now that growth rate is done with, so investors are getting out. That's one aspect. Tesla got the Trump bump. He's now making new friends. And we're seeing revenues drop significantly, or sales drop significantly for Tesla out of Europe. We really haven't seen too much indication here in the United States, but there's probably an in-kind drop in those sales. Now, the thing is, Tesla gets a lot of its money. Once they sell a car, all right, their margins on cars are nothing. But then they sell that credit. Here's the problem. You have to sell a car to get a credit, to be able to sell that or get that credit, which is a big chunk of their profits. So I see this as a big problem moving forward for Tesla, and it may no longer be a meme stock. Let's break down quarterly revenue for McDonald's. Now, they didn't hit expectations as they wanted. They were off slightly for revenues. And from a year-over-year basis, they're fairly flat. Not really much growth there. And this is one of the things when I look at McDonald's stock, I sit there and I say, you guys think this company is actually going to grow faster? Because it was pretty flat for this quarter, year-over-year basis. I'm not 1,000% on board with that. I think McDonald's will hold its own because of individuals eating there versus certainly premium places. And given that, you'll see some revenue increases, but I don't think there's justification for the current values. Now, gross margins, of course, they have some pretty solid margins because of their structure of their business. 55.5% for the quarter, 45.2% on our operating margins, net margins 31.6%. Every dollar they bring in, they keep 31.6 cents. Not bad at all. This is a bastion of the United States economy. They're a cash king. I mean, they produce cash. Earnings per share, $2.82 for Q4 versus $2.95 last year, same period. So when I look at these numbers, I don't necessarily see huge jumps that they had previously been at levels that made more sense for McDonald's and MCD stock. Price to earnings ratio, they've kind of kept fairly solid price to earnings ratio. The broader stock market itself, we're seeing the price to earnings ratio moderate, getting close to McDonald's type numbers. Will we see revenue growth moving forward that justifies these price valuations? I don't think so. So price to earnings ratio very likely will remain flat. Projected revenue for 2025, they're looking at 26.5. That's a small incremental gain. So 25.9 to 26.5 is 0.6. That's about 2.5% revenue growth rate. Not massive. That's my take from this. But the thinking within Wall Street is that there's going to be more than this. Okay, fine, you're going to have to beat that. But then when you look at the margins, they've got fat margins. So if they do see a bigger gain in revenue, that could easily push their earnings per share up higher with the margins at 31%. That's something I'm looking at. 12.30 is the earnings per share projection for McDonald's. And let's value MCD stock based on that. When you look at the treasury yield right now, 4.325, that is falling. This is your benchmark investment rate. This is where you can buy in on a stock or the yield. This is your alternative investment, the benchmark, 4.3%. Call it 4.29, I think, right now. 2025 earnings per share projections. I see that it says 2024. My apologies on that. I'll update that. 12.30 is the earnings per share. Current MCD stock price, McDonald's stock, 321, giving you an MCD stock yield of 3.829%. That's pretty solid, considering that we are seeing the stock market fall as much as it is based on tech, and you're going to see in-kind shifts, but you're also seeing moves into the treasury market. When they sell off the stock market, they buy treasuries. So that yield will push, price will go up, the yield will go down. So on a competitive basis, the treasury yield might beat MCD stock yield. So that's something to kind of keep in mind. 3.82% could easily move a little bit higher if McDonald's stock does outperform the 12.30. So I can kind of buy into this. But at this point, I like treasuries a lot better. Bottom line. If you bought, let's call it 4.25% at the end of this week, given what's going on in the stock market, if you got the 10-year at 4.25%, or some of the front months, which are pretty close, about 4.15%, and we see a big shift out of stocks, they're going to buy bonds. They could easily push the treasury yield by purchasing treasuries and pushing price up, bring the yield down to, say, 4%. Not a huge stretch at all. Given that, where does that put your treasury purchase? Well, if you're sitting on yields, if you buy a treasury, a 10-year, and you're getting 4.3%, and all of a sudden yield is at 4%, you're sitting on some money. MCD stock, they would have to outperform what we're looking at right now. Even if the treasury yield dropped to 4% with a far less risky investment, I see the treasury yield being a better bet right now. I think the 3.829% is pretty solid. It's a moving target. MCD stock will likely move lower because the broader stock market's going to do so. The economy is going to contract. Tariffs are going to train wreck everything. So while I can see the sort of stock players are cycling out of riskier assets, getting into MCD stock, I think, is a more risky move at these higher levels. For me, no thanks. TLT ETF. If you've been following me for any period of time, I'm going heavy onto the treasury yields because I believe treasury yields are going to come down. The economy will slow down. The Federal Reserve will have to shift and bring interest rates lower. My treasury yields that I've been gobbling up at these prices are going to make money. And if that's what you're looking for, that's how you make money in the stock market. Make sure to hit the like and follow button. Make sure to stop by my Substack, growing real rapidly there. Thanks so much for the support there. I am repurposing any YouTube videos on straight into Substack so you can still get all the information there without the advertisements. We'll see you in the next video.